guys, welcome back to the Capital Mindset Show. Today, we're going to be revisiting a company that we talked about in the past, and that is Corsair Gaming. So for those of you who have been watching us for quite some time now, you guys remember this video over here. I mean, I'll pull it up right now. So this video was posted November 24, 2021. And this was because we made several videos in the past before this video talking about Corsair, why we thought that Corsair was actually valued, a bit lower than when it was at the time. And we talked about, I think in a couple of the videos, that I thought the fair value was in the teens. And I don't think it ever got into the teens, but that was where it was kind of compelling. And I think my exact price was between $18 to $14 around that range. And then I also said that if it ever reached under 23, that I would pick some up because, at the time it was trading higher. And I, to be honest, I was just like, trying to make a statement. And then I ended up having to buy. There was a video after that where I ended up having to buy because it actually hit below that. And if you see on the public portfolio that's available for everyone, you can see Corsair's in there, and it says right there why I bought it. It says YouTube accountability, right? So be accountable when I say something on YouTube that I'm going to do something, I'm going to do it. So I'm holding it in the portfolio, and it's a very small position, so whatever. But looking at Corsair, the price action, it is actually what price it? Oh, it actually did get into the teens. Oh, I didn't even notice. All right. Yeah, it hit the teens. So there was a lot of talk at the time. I mean, I think we started making videos on Corsair around here and all the way through here. And then obviously through November, where's November? Here, right? So yeah, all the way through here. And I think that's where when it hit the 23 mark was when that video was made. And then, it bottomed down in the teens. Look at that. All right. And then now we are, about 26, 30% up from the lows. Now, has things changed? Well, what I'm going to first talk about is some of the things that I was concerned about then, and we'll kind of see if they are materializing now. All right. So we'll actually take a look at the cash flows, and I'll kind of highlight that for you guys here. I'll zoom in for everyone to see better. So look at this net cash provided by operating activities. You can see that in 2020, it was 168 million, but in 2021, it was 20 million, this drastic decline. Well, what occurred? Well, in accounting, we're going to actually take a look here, and I don't want to make this an accounting video, but if you have any comments down below, questions, comment that down below, and I'll try to get back to you in a reasonable time. Or, we have a really good community here on Capital Mindset, and we have a lot of bright people. I see them answering other people's questions all the time. So I'm really proud of that. All right. So taking a look at the accounts, where is it? Accounts receivable, accounts payable. There we go. So accounts payable, we see this line item right here. So it was 116,522,000 in 2020. Okay, what does that mean when it's positive? Well, when it's positive, that means that the expense was accrued during that time period, but no cash was paid out. So since it's a non-cash expense and we're in the statement of cash flows, we add that number back in, and then it makes the cash flows from operations look higher. Well, now in 2021, we are actually expensing that cash, about 63,722,000. So then now that's a negative because we are actually giving out that cash out, right? So that is one of the things that's actually causing the difference, right? And we see another big difference is these accounts receivable. And again, if you guys have any questions on the accounting, just comment down below, and me or the community members will answer that. But I'll try to be there answering in a reasonable time frame. Okay, so those were some of the concerns I had. And if you just take a look at the net income, if you're a PE, won't say that word, but PE enthusiast, then you're obviously going to say, oh, it has a low PE, therefore, buy, right? And I think the PE actually is coming down. Well, not the P is coming down. The P is actually going up. We are seeing this, however, look at this stock-based compensation. So stock-based compensation, I mean, that's not terrible. It's not crazy. It's just $17 million. So nothing to go, oh, that's too much. I can't believe it. It's fine for the size of the business, but it is good to notice that it is ramping up, and they are actually not deleting shares. They're more issuing shares, right? They're giving it the stock-based compensation. That is an actual expense. So actually GAAP net income does a great job of actually realizing that as an expense. People don't like to use it as an expense. And I've heard some creators say it's not an expense. No, it is an expense. It actually does deteriorate your gains over the long periods of time. The expense is just a non-cash expense. Okay. So let's be very clear, but it's different. You actually do want, it's nuanced. You do want to actually consider that and be careful with that. All right. So let's go ahead and go over to the model and see what we pull up. Corsair Gaming. I'll go over here, slide here. You guys can pause, take a look at that thing that you guys, some of you like to look at. And then let's go back here. All right. So analysts have a price target of You see, analysts, they're just, momentum guys, right? So as soon as it comes down, then they lower the price targets. They're not having low price targets when it was $30. They weren't saying that when it was $30. Now they're saying it's 19, but they are saying it is a strong buy. Okay, so it's kind of like, but there's a little nuance to why that is. Okay, so we are discounting it not at 50. Let's discount it at 10. So at 10% discount rate, we are already kind of in the green for what is expected. But I assume if you're investing in Corsair, you're probably someone who's looking for a little bit more returns, right? And so we can see that it was kind of in that price point where I was actually comfortable actually entering the business, and it was at 18. I just didn't catch it, but it's not a business that I'm really like passionate about, so I'm completely fine with missing that boat. Now the question is today, what are we pricing in? Well, we can see it, we can get modest growth and expect a 15% required rate of return for the next 10 years, but definitely it was not a buy in the 30s. That was no, I don't understand that. But when it was in the teens, that was an interesting price point. I can say that. I'm not going to price in that decay. That decay is probably not going to happen. So 2%. I think that 10 to 15% is on the higher end is pretty reasonable. I know that the gaming market, I think for their part of the gaming market, it's growing like 9%, something like that. The gaming market as a whole is growing like 15%, but their specific space that they control is growing at that. The fastest growing segment is probably streaming, but to how long that will grow, I don't know. I don't have the answer to that. Taking a look at some of their key metrics, though, they do have a good book value, but as the tangible book value goes, it's much lower. That makes sense because they probably have a lot of goodwill, or not a lot of goodwill, but a decent amount of goodwill. Taking a look at the key ratios. Let's go over here and actually spot some. So key ratios, current ratio is pretty good. Cash ratio is abysmal, but I won't hold them against them because that's the most conservative measure. The solvency ratios have improved drastically. You can see that from when they were a private company, they actually improved that drastically with that IPO money. That's what they did. Going to the DuPont analysis, we do see gross profit margins are rising. How long can that happen? Because we see a little decline from 2020 to 2021. Will that decline continue? That concerns me. Operating margins, obviously it's not 0%. That's just something that's just not porting in, right? But operating margins are, okay, I don't know if they're going to be 9.92. Well, actually, no, what's probably causing that? The number's so small, right? That's actually what's probably causing it. The operating profits are really small for 2021. So it looks like it's zero, but it's just rounding it to zero. Net profit margin is really low, ROA, ROE. So yeah, it's just accounting gimmicks. That's probably what's causing that. Going over to here. Yeah, it's definitely accounting gimmicks because we got this thing over here. All right. So anything else that's kind of interesting to talk about? No, I think that's pretty much it. So regarding Corsair, it's decently priced at the moment. It's not where it was better. It was much better priced when it was in the teens. Unfortunately I didn't make a video when it hit there, but in the past videos, that's when I said it was going to be a good price point. I did say, as low as like 14 or something like that was like the best price. And that's when it was really interesting, but 18, it started at 16, it started to get interesting, but right here, it's kind of like, but it's not a, terrible, right? There are much worse out there, and definitely it's not at risk of bankruptcy or anything. We see the Altman Z score 4.66, and the model itself is saying no, it's not at risk of bankruptcy. So it's an interesting business. They might conquer their specific area of the market. They might not, who knows? We know that Razer is actually going to go public, I think soon. If not, they're already public in the United States. They are public already, but it's not that convenient to buy their shares. And then, you have also Logitech. So Logitech's another one. And let's see, I think it's LOGI. So I might as well just show them. It takes me no time to just pull them up. So Logitech is the, so this is Logitech. Logitech is the big boy in this business. And we can see here, as far as the metrics go, it's actually just better in a lot of ways in terms of quality, but they are, again, the big boy in the room. So the PE at 13.53, and I think that's cheaper than Corsair's. Let me, sorry guys, terrible memory right now. It's really late for me. Yeah, on a PE basis, they're better. Taking a look over here, let's Okay, it was taking all the time. It's important. So the price target is actually higher for analysts, implying a 59.52% upside. Logitech does a lot of business-to-business transactions. So they actually will go to large enterprises and say, well, we'll supply all your computer hardware for this contract. So it's actually a very stable business in that sense. And then Corsair is actually focusing a lot on gaming. But the thing is, Logitech's also focused on gaming as well. They're actually entering that market as well, but they also control other parts of the market. So again, Logitech is the big boy in the room. Return on invested capital is insane, but I think, that's pandemic numbers. We'll see what happens. They are a little bit dilutive. So I'm actually going to dilute us by, just about 0.9%. And I think Logitech's really interestingly priced in comparison to Corsair. This video all of a sudden is now become a Logitech and Corsair because, whatever, let's do it. So originally it was just going to be Corsair. We're getting into Logitech. So Logitech's actually down from all-time highs. Again, we're seeing that same thing, where we're kind of returning a little bit to the office, a more hybrid work environment. So will these products be as utilized as before? Maybe, maybe not. So it is really, it's a lot higher than what it was before pandemic. So we want to make sure that the numbers or the business fundamentals don't actually return or revert back to normal. Let's go and find out through the key ratios, what would that kind of look like, or a glimpse of that. So, wow, liquidity ratio, that's fantastic. The cash ratio is above 1. Ooh, that's really good. Solvency ratio is better than, so basically on a liquidity ratio, they're better than Corsair. On a solvency ratio, they're better than Corsair. On a profitability ratio, I think they're better than Corsair. You guys can go back in the video and kind of clarify that for yourselves. And but I'm pretty sure my brain kind of remembers that they are better than Corsair here. All right, so taking a look at this. Okay, so earnings quality is pretty good. I like a lot of this. All right, they're generating tons of free cash flow. Pretty good there. All right, so going back here. Oh, we want to actually take a look at this. Why buying? Okay, worth it. Okay, so people are pretty much bullish. Again, I'm still working on the sentiment calculator, and we'll calculate sentiment based on what people are saying on social media and stuff like that. So, but for now, we're just kind of using our eyes and reading the past 10 articles. But it looks pretty bullish, I guess. People are, obviously analysts are bullish. Analysts are bullish on both of them apparently, because they both said strong buy. Just Corsair had a lower price target than what it was trading at. Logitech has a higher price target. Again, we are looking at the big boy. This is definitely better capitalized. The Almond Z score is way higher than Corsair's, but both are pretty good in that sense. So neither is at crazy risk of bankruptcy, or not crazy risk, no risk of not, oh my gosh. They're not either. You see, when I'm tired, I just jump the gun there. Neither of them are at risk of or crazy risk of bankruptcy whatsoever. So, on that. Logitech does have a dividend for you dividend investors out there, and it's a very conservatively paid out. It's a 10% payout ratio and a 1.16% dividend yield. So pretty interesting there. So again, taking a look at the same growth metrics or growth estimations, Logitech is, about, it's right there. I think it's a pretty good business. Between the two, if I had a gun pointed to my head and I had to make a choice, I'd probably pick Logitech between the two. But, I am cautious that in the moment we are in, I want to kind of get a little bit more data to see if things are normalizing for them or not. The same concerns are still there. It's not typically businesses I'm completely in love with, but again, if between the two, I'd probably prefer Logitech. And Logitech, by the way, is not a slow grower. They were growing. Let's actually take a look at the visuals. Their revenues are growing pretty nicely in the past couple of years. If we go back to Corsair, just to visualize that, I think Corsair is growing too, but I think Corsair didn't grow as much as Logitech. So for those of you who are growth investors, it's not like you're picking Logitech as the value play. Logitech's actually not really the value play between the two. It's more growthy than Corsair in terms of the business, right? So again, Logitech just has a really powerful negotiating power. They're a very big company in what they do. They are the big boy. So, I mean, actually, they make really good webcams too. So I think between the two, I'm pretty sure Logitech's webcams are better than the Elgato webcams. The Elgato webcams are I think they're like $250, and Logitech has, in that price range, they have cheaper ones and they have more expensive ones. So yeah, but neither is like a terrible business. But again, I think I'd prefer Logitech. All right. On that note, guys, I hope you guys liked this video. And if you guys did, go ahead and feel free to leave a like, subscribe if you haven't subscribed yet, and you can come back to the channel and you might see a stock that you wanted or were interested in, and you can hear my thoughts on that. If you guys have any stock requests, go ahead and leave them down below, and I will be sure to add them to the list and eventually get to them. If you guys have any questions, because I did cover some accounting topics, go ahead and leave them down below, and I'll try my best to get back to you as soon as I can and answer those questions. If not, we have a great community here, and I see you guys comment with one another and interact with one another like that. All right. So on that note, guys, I'll see you guys in the next one. Have a good one.